India has slipped to the bottom of the Asian stock market pecking order. Bank of America's latest fund manager survey has ranked Indian equities as Asia's least preferred stock market, replacing Indonesia. And 32% of the fund managers surveyed are now net underweight India. That comes at a time when Indian equities are already among Asia's worst performing major markets this year. So, what's really making global fund managers cautious about India? Let's understand in Markets this week. First, what exactly does the survey tell us? Bank of America surveyed 98 fund managers managing $272 billion in assets between 7 and 13th August, and 32% were net underweight India, making it the least preferred market in the survey. But remember, being underweight does not mean investors have abandoned India. It means their allocation to Indian equities is lower than their benchmark or preferred allocation. Indonesia, meanwhile, has moved the opposite direction. The share of fund managers net underweight Indonesia fell to 27% from 32% in July. Taiwan and Japan remain the region's preferred markets. So why is India losing out? Well, the biggest concern is something India does not have enough of: direct exposure to the global AI boom. Markets such as Taiwan and South Korea sit at the heart of the semiconductor and AI hardware supply chain. Their stock markets have benefited from the massive global investment in AI. India does not yet have comparable listed market exposure to that investment cycle. And that matters because global investors are looking for markets that can capture the next phase of AI-led growth. But AI isn't the only concern. Fund managers are also worried about India's economic growth outlook. Then there are valuations. Even after the market correction, investors are questioning whether Indian stocks offer enough earnings growth to justify the premium valuations they command. A perceived lack of reforms is another concern, and expensive crude remains an additional vulnerability. India imports most of the oil it consumes, so prolonged high crude prices can put pressure on inflation, the trade balance, and economic growth. And these concerns are showing up in India's relative market performance. The Nifty 50 has recovered around 8% from its March low, but it is still down about 8% this year, making India the second worst performing major market in Asia. That also puts the Nifty at risk of breaking a remarkable run of 10 consecutive years of annual gains. Indonesia, meanwhile, has staged a strong recovery. The Jakarta Composite has gained more than 20% from its June low, helping improve investor sentiment towards the market. But here is where the India story gets interesting. Global fund managers may say they are underweight in India, but foreign money has actually been returning. Global funds have bought more than $4 billion worth of Indian stocks this quarter, the highest inflow among emerging markets in the region. And corporate earnings are also challenging some of the pessimism. Nifty 50 companies delivered around 18% year-on-year earnings growth in the latest 3-month period. Now that was significantly better than the roughly 10% growth estimated by Motilal Oswal Financial Services. So if money is coming back and earnings are improving, why aren't global fund managers convinced? Because markets don't just reward current earnings. Investors are also deciding where future growth will be strongest and how much they have to pay for it today. India may offer improving earnings and strong long-term growth potential, but it is competing for global capital against markets such as Taiwan, Japan, and South Korea, which currently offer investors greater exposure to the AI and technology cycle. So, is India's stock market story broken? Not necessarily. Foreign money is returning and corporate earnings have surprised on the upside. But global fund managers are questioning whether India currently offers enough growth enough AI exposure, and enough value at current prices. And that is the real tension in Indian equities right now. The fundamentals may be improving, but India still has to compete with the rest of Asia for every global investment dollar. That's it for this episode of Markets This Week. For more such deep dives on markets and the economy, follow Business Standard.